What if I told you that most traders lose money on Bitcoin not because of the market, but because of one mistake they make in the first 60 seconds of a trade? In this video, I'm going to show you exactly how professional spot traders approach Bitcoin, and the 3 real-time tactics that separate the winners from the 90% who blow their accounts. Stay until the end, because tactic number 3 is something almost nobody talks about, and it could completely change how you trade. If you've been trading Bitcoin, and you're tired of buying tops and selling bottoms, this is the video you've been waiting for. Let's get into it. Before we dive in, quick disclaimer, nothing in this video is financial advice. I'm sharing tactics and analysis for educational purposes only. Always manage your own risk. Now, Bitcoin spot trading is different from futures. You're buying and selling the actual asset. No leverage, no liquidations, but that doesn't mean it's easy. The market moves fast, and if you don't have a clear framework, you're basically gambling with extra steps. Today we're covering 3 specific spot trading tactics for Bitcoin. All of them based on real market structure, and all of them things you can apply starting today. Let's go. Tactic number 1. Seabane's Tactic 1 done. 1. The order block entry. Here's the truth. Bitcoin doesn't move randomly. Big players, institutions, whales, market makers, they leave footprints on the chart, and those footprints are called order blocks. An order block is simply the last bearish candle before a strong bullish move. Or the last bullish candle before a strong drop. Show chart example on screen. Look at this area right here. Price came down, tapped this zone, and exploded upward. That's an order block. And here's the beautiful thing. Price loves to come back and retest these zones. So the tactic is simple. Identify a strong bullish move on Bitcoin. Go back and find the last red candle before that move started. Mark that zone on your chart. Wait for price to come back and tap it. Enter your spot buy with a stop loss just below that zone. Why does this work? Because the institutions that pushed price up in the first place, they still have unfilled orders sitting right there, and when price returns they absorb the selling pressure and send it back up. This is one of the cleanest entries you can have in spot trading. No lagging indicators, just raw price action. Quick question for you in the comments. Have you ever used order blocks in your trading? Tell me below, I read every single comment. Engagement trigger, ask a question mid-video to boost comment rate. Tactic 2. Session liquidity, trade. Where the money is, most people don't realize this. Bitcoin moves differently depending on which trading session is active. The New York session, high volatility, lots of volume. The London Open, big moves, usually sets the direction for the day. The Asian session, mostly consolidation, accumulation. Here's the tactic. Use session timing to enter spots at liquidity sweeps. What's a liquidity sweep? It's when price quickly spikes below a support level. Kolkspear. In Stadstein, we tan would they are turber. Takes out all the stop losses sitting there, Nanspetster, Botstanstein, and then snaps back up hard. See this? Price dropped right below the previous low, grabbed all the liquidity, and reversed within 15 minutes. That spike down was the trap. The smart money hunted those stops. When you see this happen, especially at the London or NY Open, that is one of the highest probability spot entry points you will find. Your checklist for this tactic. 1. Mark the high and low of the Asian session. 2. Wait for London or NY Open. 3. Watch for a wick below the Asian session low. 4. If it snaps back fast, that's your entry. 5. Target the opposite side of the range. Simple, effective, and massively underused by retail traders. If you're getting value from this, do me a favor, hit that like button right now. It genuinely helps this video reach more traders who need this content. Mid-video like request, proven to boost engagement when placed after a value moment. Tactic 3, the one nobody talks about, funding rate divergence. Alright, this is the one I promised you at the beginning. This is the tactic that separates traders who consistently profit from Bitcoin from everyone else. It involves the futures funding rate. And yes, even though we're talking about spot trading, this is incredibly powerful. Here's the concept. When the funding rate on Bitcoin perpetual futures is extremely high and positive, it means the majority of the market is long and over-leveraged. Everyone's betting on price going up. And what happens when everyone is positioned the same way? The market punishes them. We call this a funding flush. Price drops sharply to liquidate all those over-leveraged longs, and then, it recovers. Your spot trading edge here, when funding rate is abnormally high, 0.05%, 0.1%, even higher, start watching for exhaustion signals on the chart. Rising wedge, bearish divergence on RSI, weak momentum on higher highs. When you see those signals alongside high funding, that's your signal to wait before buying spot, or to buy the flush when it happens. Conversely, when funding goes negative, extreme fear, everyone short. That is historically one of the best times to buy Bitcoin spot. Everyone's wrong at extremes. Look at this. Negative funding here, spot price here. Look what happened next. This is information that's completely free, available on CoinGlass and Glassnode, and almost nobody in retail uses it. Now you know. Drop a comment below, type funding if this changed how you think about spot entries. I want to see how many of you are going to start using this. Bonus, why all three tactics fail. Without this, I have to be honest with you. You could apply all three of these tactics perfectly and still lose money. Why? Because without risk management, even the best entries will destroy your account over time. Here's the simple framework I use for Bitcoin spot trading. 1. Never risk more than 2% of your total capital on a single trade. If you have $1,000, your maximum loss per trade is $20. This keeps you in the game. 2. Always define your invalidation point before you enter. Where is price not allowed to go if your thesis is correct? That's your stop. Put it there, no exceptions. 3. Aim for a minimum 2.1 reward to risk ratio. If you're risking $20, your target should be at least $40 gain. Over 100 trades, even a 40% win rate makes you profitable with this math. 4. Position sizing is more important than entry. I cannot say this enough. You can be wrong on direction and still survive if your position size is correct. These 4 rules have saved me more money than any fancy indicator ever could. Screenshot this. Write it down. Tattoo it on your arm. I don't care, just never trade without them. Let's quickly recap what we covered today. Tactic 1. Order block entries. Find where institutional orders are resting, wait for price to return, and enter at the zone with a tight stop. Tactic 2. Session liquidity sweeps. Trade the London and NY open. Watch for stop hunts below the Asian session range. The wick down is your buy signal. Tactic 3. Funding rate divergence. Use the futures funding rate to gauge market sentiment. High positive funding means a flush is coming. Negative funding means fear is at extremes. Prime spot buying territory. And the bonus, risk management. 2% max risk. Define your stop first. 2.1 minimum RR. Position sizing over everything. These are not theories. These are real tactics used by real traders every single day in the Bitcoin market. Tactic 1. Order blocks. Tactic 2. Session liquidity. Tactic 3. Funding rate. Bonus, risk management. If this video gave you even one new idea for your Bitcoin trading, please share it with a friend who trades. Seriously, most people keep this stuff to themselves. Be the person who actually helps someone level up. And if you're new here, I post in-depth trading content every week, real tactics, real analysis, no fluff. Hit that subscribe button and the bell notification so you never miss a video. I want to hear from you. Drop a comment. Which of the 3 tactics are you going to test first? Order blocks, session liquidity, or the funding rate play? Tell me below. I'll see you in the next one. Trade smart, manage your risk, and stay patient. The market rewards discipline. See you next video.